Welcome, welcome, welcome. So right now we are starting with our revision series. So revision series for the students of southern parts of India who want English revision videos. Who want English revision videos? So if you are a student who is comfortable with Hindi, okay, you are able to understand Hindi, we have a separate playlist for you. But for the students of southern parts of India who want English revision videos, this is the revision playlist for you. In this video, we are going to cover the basics of audit. These basics of audit are the concepts which you studied in your CA intermediate. Okay, sir. And these are the concepts we will be applying in the remaining chapters. Okay, all the remaining topics which are core part of your CA final, these concepts will be used there. So it is very important for you to revise these concepts of inter so that everything that you study with me in the other chapters that becomes clear to you. If I talk about from exam point of view, this basics of audit chapter, this is not that important. Okay. This is not relevant much from exam point of view, but it is relevant from your understanding point of view. So when you are covering this revision video with me, all you need to do is just sit, properly listen to me. Being a class student, you can refer these class notes. If you are not our class student, that is not a problem. I will share the PDF of our board notes on our Telegram channel. Sir, what is the name of Telegram channel? Clear CA with Shubham Keswani. So for those who don't know me, I am Shubham Keswani. I'm a chartered accountant. I teach audit to CA inter and CA final students. Okay. And that's it. I have secured all India rank at CA final, and after that for last 4 years I have been teaching audit to CA students. So starting with the first concept, sir, why do we audit the financial statements? Okay, let's begin from the basics. Why we do the audit of financial statements? So I hope all of you understand. If there is a company like Reliance Limited, in Reliance Limited, the people who invest the money, they are the shareholders. So they are different people. The people who are managing the entity, management, they are different people. So it can happen that when the management is presenting the financial statement to the shareholders, please focus on the board. When the management is presenting the financial statement to the shareholders, that is the balance sheet, P&L and notes to accounts, they may be biased. They may be biased. They may show lower profits to lower the taxes. They may show higher profits to gain more bonus or commission. So it can be biased. So to check the financial statements, we need a auditor. Now, sir, this person can't be a part of the shareholder. This person can't be a part of the management. He should be independent. That is the independent auditor. Similar concept we study in company law also, section 141 subsection 3, that as an auditor you cannot hold the shares in the company. You can't be an employee or officer of the company, so you should be an independent auditor. Is the basic clear? Yes, sir. Now, sir, how to check the financial statements? So always remember that whenever you want to check the financial statements, you need to use a particular marking scheme. Like your exam papers, they are evaluated against a marking scheme. Financial statements are also evaluated against a marking scheme. Sir, what is this marking scheme? For example, the financial statement should be prepared as per Schedule 3, accounting standards. Small companies AS, big companies Ind AS. So what is this collectively called? Sir, this is called applicable financial reporting framework. Say with me, applicable financial reporting framework. So in audit, when we'll be revising the concept, we'll be referring to it that the financial statement should be prepared as per applicable financial reporting framework. So this is the framework as per which the financial statement should be prepared. Did you understand this concept? Deal done? Done, sir. Now, Baba, understand one more concept. If the financial statements, the way they are prepared, and the financial statement, the way they should have been prepared as per applicable FRF, if there is a difference between the two, what is that difference called? Sir, that difference is called a misstatement. Not a mistake. Don't use the word mistake. We will call it as a misstatement. So what is a misstatement in the financial statement? If there is a difference between what is prepared and what was required to be prepared as per applicable FRF, that difference is called a misstatement. So sir, that difference can be in the amount, classification, presentation or disclosure. Say with me, four things: amount, classification, presentation or disclosure. So if there is any difference in the amount, classification, presentation or disclosure, you can call it ACPD. That is reported in financial statement and that was required as per applicable FRF. If there is a difference between the two, that is called a misstatement. Did you understand that point or not? Yes, sir. Now, sir, in intermediate, we have studied that auditor is not affected by misstatement. He does not give a damn about misstatement. He is affected by material misstatement. So the next concept now we are revising is material misstatement. So understand now, as a user, ठीक है, as a shareholder, I decided to invest my money in Reliance Limited. Now I will take two scenarios, participate with me. Let's say the revenue of the Reliance Limited as per the PNL, it is 10,000 crore. Okay, sir. In PNL, it is 10,000 crore. But the actual revenue, it is 9,999 crore. Okay, sir. So can I say the difference between what is reported and what was required to be reported as per applicable FRF, this difference is 1 crore. Oh, there is a misstatement of 1 crore. So do you think a misstatement of 1 crore will affect your decision to invest in the entity? No, sir. It is fine. 1 crore is a misstatement that we are fine with. There is no problem. Now, sir, I have decided to invest in Reliance. Revenue of the Reliance as per PNL is 10,000 crore, but the actual revenue is 9,000 crore. Oh, PNL 10,000, actual 9,000. Now there is a difference of 1,000 crore, which is the misstatement. Are you fine with this misstatement? No, sir, we are not fine. 1,000 crore misstatement in 10,000 is too much. So what do you call this misstatement which is too much? This is called material misstatement. So this is the definition you study in accounts also. When is the misstatement considered material? A misstatement is considered to be material if they can influence the economic decision of the user of financial statement. So these are the misstatement which affect the user, and auditor also cares. Auditor is also affected by material misstatement only. Is this concept clear? Yes, sir. Now tell me one more thing, please. Can the auditor give a guarantee that financial statements are free from material misstatement? Answer is no. Auditor can never give a guarantee. He can never give an absolute assurance. So what can he give? Sir, he can give a reasonable assurance. He can give a reasonable assurance. So we remember this. Auditor can only give a reasonable assurance, which is a high, but not an absolute level of assurance. Now the question is, sir, how do we get a reasonable assurance? How can we get this confidence that financial statements don't have any material misstatement? Sir, for this you need to collect audit evidence. Please take 2 sips of water. Then we will begin with the revision of audit evidence. Ready? Easy, easy? Yes, sir. Now, sir, the question is, how should be our audit evidence? So we studied in Inter that the audit evidence should be sufficient and appropriate. First of all, what do you mean by sufficient? Sufficiency is a concept related to quantity of evidence. For example, if you feel that the chances of material misstatement in the financial statement they are high, so you will collect more evidence. If you are getting good quality of evidence, then even lesser quantity will be sufficient. So sufficiency depends on risk of material misstatement. More risk of material misstatement, more quantity. It also depends on quality of evidence. If the quality is good, less quantity will work. Now talking about the appropriateness of evidence. Appropriateness, that is the quality, depends on two factors: relevance and reliability. They are like two sisters, two cute sisters. Relevance and reliability. Do you want to revise the concept of relevance and reliability? Yes, sir. First, let's revise relevance. Okay, sir. Relevance is the logical connection between the audit procedure and the assertion that is being tested. Once more, relevance is a logical connection between the audit procedure and the assertion tested. Sir, what do you mean by assertion? Let's revise. So understand the thing, huh? For example, we are talking about relevance. As on 31st March 25, my debtors are rupees 5 lakh. And these are 10 people who are included in this 5 lakh amount. There are 10 debtors. Okay, sir. Now, if I talk about debtors being a balance sheet item, or you can say being an account balance, there are 4 assertions we studied in CA Inter. Sir, what are these 4 assertions? Existence, right, completeness, valuation. Okay, ERCV. Existence, right, completeness, valuation. Now to check the existence of the debtor, how can I check the existence? Sir, we can draft an external confirmation request. We can send an external confirmation request to the debtor, and if he replies to the confirmation, he exists. He is not a fake debtor. Okay, sir. Now talking about the right. How do I get to know that I have a right to recover the money from the debtor? Sir, when you make the credit sales, then you have the right to recover the money. So how do I check the sales? Sir, you can check the sales documents, invoice, e-way bill, delivery documents. These documents you can check. Now talking about completeness. Completeness means I have a doubt that apart from these 10 debtors, there could be a 11th debtor also. Oh, which might be omitted by the entity. Which might be omitted by the entity. Now to check this 11th debtor, what are the procedures I can do? Sir, you can check the subsequent bank statements. Subsequent bank statements means if I want to check the debtor as on 31st March 25, the subsequent bank statements are April, May, June 2025. When you check these bank statements, you will see the receipts. Okay, sir. Now in those receipts, you may find a recovery from a person which has not been booked as a debtor. Oh, so through the subsequent bank statement, you can check the debtor if any debtor has been omitted by the entity. Got it, sir. And the last point is related to valuation. Debtor's valuation depends on provision. And to check the provision, we need to do another type of procedure called as aging analysis. You know there is a aging of debtors. Yes, sir. Not due, due for less than 6 months, 6 months to 1 year, 1 to 2 year, 2 to 3 year, more than 3 year. Yes, sir. Depending on the aging, you create the provision. For example, someone who is not due, you can create 0% provision. Less than 6 months, 10%. 6 months to 1 year, 25%. 1 to 2 year, 50%. 2 to 3 year. Here, what you can do? So there is no debtor, so no provision. So depending on the aging, you can increase the provision because someone who is due for 1 to 2 years, it is too old. Yes, sir. So more provision should be created. Now, sir, to check the valuation, you are doing the testing of the provisions. You are doing the aging analysis wala procedure. You are getting the point or not? Yes, sir. So what have we learned right now? Sir, we have learned that depending on the assertion, we do the procedure. For right, we do a different procedure. For completeness, we do a different procedure. And for valuation, we do a different procedure. That means the evidence that we are collecting is relevant to the assertion that we are testing. The evidence that we are collecting is relevant to the assertion we are testing. You are getting the point or not? Yes, sir. Can I say these things are logically connected? These two things are logically connected. Yes, sir. So this is the meaning of relevance, logical connection between the assertion that you are testing and the procedure and evidence that you are collecting. You are getting the point or not? Yes, sir. Now, Baba, let's understand the concept of reliability. If you understood the concept of relevance, please give a like on this video. Come on. Now, sir, talking about reliability. See, these are the concepts which you must have studied in SA 500 during your CA inter. Okay. But it is very important for you to know these concepts as a chartered accountant, as an auditor, because then only you will understand the topics we are going to cover in further chapters. Deal done? Enjoying the revision? Yes, sir. Now let's talk about reliability. See, reliability means can I trust the evidence? Okay, evidence is relevant, but can I trust that evidence or not? That depends on reliability. Now, sir, that reliability depends on the nature of evidence, source of evidence, circumstances in which it has obtained. Let's understand. Let's understand the nature, source, and circumstances. For example, source. We know that generally the external evidence is more reliable. The confirmations that we get from bank, creditors, debtors, these are considered to be more reliable. But the evidence which is generally internally generated, this can be reliable when the internal controls are effective. So if the internal controls are effective, the processes of the entity are effective, then even internally generated evidence can be reliable. Got it? Got it, sir. So this is about the source. Now talking about the circumstances. Sir, what about circumstances? I will tell you two cases. You tell me which will be more reliable. There is a evidence I have got through the management. I asked the management for some documents. They gave me the documents. I asked the management about how they count the inventory through inquiry, and they gave me the evidence that this is how they do the inventory count. Okay, sir. So this is the first category of evidence I am getting through the management. Second category of evidence is observation. I myself went to the warehouse. I observed the inventory count procedure. Which is more reliable? Doing the inquiry from the management, asking them about the inventory count, or directly observing how the inventory is counted? Sir, in the first case, management can lie. Management can share false information, but when you directly go to the warehouse and directly observe the inventory count, ठीक है, that is more reliable, that is more trustworthy. And this is what is written here. Circumstances के केस में evidence obtained directly is more reliable than obtained through the management. And talking about the nature, obviously documentary evidence is more reliable than oral, and even in documentary, original document is more reliable than photocopy or any digitized PDF, because these things can be manipulated easily. You understood the concept? Yes, sir. So we have just covered a basic concept of what? Evidence. The evidence should be sufficient and appropriate evidence. Sufficiency means quantity, appropriateness means quality, and quality depends on two factors. Relevance means whatever is the assertion, based on the assertion you will perform your procedures. Reliability means whether you can trust the evidence or not, and that depends on various factors like nature of the evidence, documentary or oral, source of the evidence, external, internal, and circumstances, whether you are getting it directly or through the management. Easy peasy, easy, sir. Now, Baba, let's revise the concept of assertions in a little more detail. What were the assertions? Sir, assertions are the representations of the management which are there in the financial statement to identify potential misstatement. Sir, what do you mean by potential misstatement? For example, if there is a debtor, okay, sir, will I test the debtor or I will test the assertions of the debtor? Sir, we don't test the debtor, we test the assertions. We test the existence, right, completeness, and valuation. So whatever misstatements you find, it can be that debtor exists, debtor pe we have the right, debtor is complete, but valuation may there is a misstatement. So always remember the misstatement is in the assertion of the item. ठीक है? The misstatement is not in the debtor. The misstatement is in the assertion. Assertion means existence is there, right is there, completeness is there, but provision is wrong. So when the provision is wrong, you will say that there is a misstatement in the valuation of the debtors. There is a misstatement in the valuation of debtors. Understood? Yes, sir. So that's why studying the assertions is very important, because based on the assertion you will perform the procedure, and based on the procedure you will understand whether there is a misstatement in the assertion or not. Easy? Easy, sir. Now, Baba, understand the assertion for balance sheet items. These are called as account balance. There are four assertions: existence, right. For assets, we have a right. For liabilities, they are our obligation. Completeness and valuation. ERCV. Existence, right, and obligation, completeness, and valuation. For the P&L item, that is what we call as class of transaction, there are five assertions. Okay. Occurrence, whether the transaction has actually occurred and it pertains to the entity. Then again, completeness. Accuracy means it is recorded at the proper amount after adjusting any discount and all. Classification, it is classified in the proper account, whether it is a revenue or it is a other income, you need to see it properly. Cutoff means it is relating to the correct accounting period. So these are the 5 assertions which we check for P&L items, or you can say class of transaction, OCACC. OCACC, that is occurrence, completeness, accuracy, classification and cutoff. And lastly, talking about the disclosure, that is a mix of all these assertions. Okay, you need not go that much in detail. Now, as we just discussed that the misstatements is not in the debtors, it is in the assertions which are related to account balance, class of transaction, disclosure, which we shortly call as ABCD. These are what? Financial statement items. Financial statement items means ABCD. Account balance, balance sheet items. Class of transaction, P&L items. Disclosure, that means notes to accounts. Understood? Yes, sir. Now take 2 sips of water. We are just about to go to the last part of this session. Done, sir. So whatever concepts we have studied till now, using those concepts, I am sharing with you essay 200. Sir, what is essay 200? It talks about overall objective of independent auditor. That means what does he want to achieve? How will he achieve it? Sir, overall objective will be achieved if you conduct the audit as per standards on auditing. So we are in our CA final, we have to study the standards on auditing. So this is the, you can say, introduction to that. Why do we need to study standard on auditing? Because audit has to be done as per standards on auditing. So how can, so essay 200 says overall objective of independent auditor. How to achieve that objective? By doing the conduct of audit as per standards on auditing. So in short, you can call it essay 200 is the king of all essays. And what is the name of king? Uya Casa. Uya means overall objective of independent auditor. Oh, Casa means conduct of audit as per standards on auditing. So what is the overall objective? As an auditor, do you need a guarantee? No. Do you need an absolute assurance? No. We need a reasonable assurance that financial statements are free from material misstatement, whether intentional, unintentional, whether due to fraud or due to error. Okay, sir. Once you get a reasonable assurance, you can frame your opinion that if material misstatements are not there, that means financial statements are prepared as per applicable FRF. When there is no material misstatement, that means they are prepared in all material respects as per applicable FRF. That means they are prepared as per AS, as per Schedule 3, everything is fine. Once you got the reasonable assurance, once you have framed your opinion, please report and communicate. Report and communicate as per essays. So this is a 3-step process. You get the reasonable assurance, there is no material misstatement. You frame your opinion that financial statements are prepared as per applicable FRF. And once you have framed your opinion, lastly, you report and communicate as per essays. Is this basic clear to you? Deal done? Done, sir. Now, Baba, I want to revise another concept, but before I revise this concept, you can come to your book and we can quickly mark whatever topics we have done. Overall objective of auditor, done, sir. Definition of reasonable assurance, sufficiency, ayo, sufficiency, reasonable assurance, appropriateness, relevance, reliability factors, done. Definition of misstatement, done. Difference between what is reported and what is required as per applicable FRF. It can be due to error or fraud. Applicable financial reporting framework, you can just read. This is a financial reporting framework adopted by the management to prepare the financial statements. There are 2 types of framework: fair presentation framework, compliance framework. Sir, what is the difference between the two? Compliance framework says, as the name suggests, you should properly comply with the FRF. You should properly comply with the FRF. Fair presentation framework says, yes, you should comply, but in addition, if you want to give some additional disclosures, you can give. If you want to reduce some disclosure, okay, you want to depart from the requirement, you can do. But remember, if you want to depart from the framework, you can do that only in extreme rare circumstances. So when you are giving the additional disclosure or departing, why are you doing that? So that you can give fair presentation, so that you can give the fair presentation. So the difference is compliance says properly comply, fair presentation says you can comply, but in addition to the compliance you can give additional disclosure, you can also depart, but also in extreme rare circumstances to give the fair presentation. Talking about the assertions, this topic also I think we have already covered. Now sir, we have some topics. First of all, talking about the TCWG. In case of a listed entity, ठीक है, TCWG are the people of the board of directors who are generally independent. Okay, or you can also call it as a audit committee. So these are the people who can, you can say, they keep their eye, ठीक है, they keep their eye on the management, that whether management is doing their work properly or not, ठीक है. So who are TCWG? Independent people, audit committee, independent board of director, who are keeping an eye on the management and they are seeing whether entity is going in the right strategic direction. They are overseeing, see, this is called oversee. They oversee the strategic direction of the entity, that whether they are going in the right direction. So many a times I will say that these are the people who oversee the financial reporting process. That means they oversee how the management is preparing the financial statements. So whenever I say people are overseeing the financial reporting process, that means I am talking about TCWG. That is the audit committee, CFO, chairman. These are the people who are at the top and looking whether management is doing their work properly or not. So in case of audit, ठीक है, in case of audit, I think we must have written something about TCWG here. I am sure, little. Where is the part gone? No, I think we are not. I'll just let you know. In case of audit, in let's say management does not give you sufficient and appropriate evidence, okay, or management is not, or management is in any way disturbing you, okay. So in most of the answer you will see we will go to TCWG. ठीक है? Whenever management is not giving you evidence or management is disturbing you, you will go to TCWG. Got it sir. Now Baba, let's understand the concept of audit risk. ठीक है? Take 2 sips of water and get ready for the concept of audit risk. Come on, turn the radio on. I will revise with this case study. Are you people ready? Yes sir. Now Baba, patiently listen to me. Case study says, this is a case study of your ICA study material only, focus. Considering the nature of the business and operations of BB Virtuals Private Limited, there are 40% chances that financial statements are materially misstated. 40% chances of material misstatement in the financial statement. Now, sir, to deal with this, management designed and implemented internal controls. These controls are expected to be 75% effective. When the auditor comes, he expects to detect 80% of the material misstatement. Considering this case study, you have to calculate the inherent risk, control risk, risk of material misstatement, detection risk, and audit risk. Are you ready? Yes, sir. First of all, talking about inherent risk. Inherent risk means what are the chances, considering the nature of business, the nature of activities, that the financial statements will have material misstatement. As the name suggests, this is inherent to the business. This is inherent to the business. Because of the activities of the business, this risk will always be there. So talking about the inherent risk, can I say as per this question, there is a 40% chance that financial statement are materially misstated considering the nature of business and operation? Yes, sir. So inherent risk is, in our case, if I talk about 40%, just read this definition. Susceptibility of an assertion, that means chances that in an assertion about account balance, class of transaction, there will be a material misstatement. Now this material misstatement can be individually or when you aggregate, before considering the internal control. So as I explained, what are the chances of material misstatement And we know that the misstatement is not in the account balance, not in the class of transaction, it is in the assertion. So what are the chances of material misstatement in an assertion about account balance, class of transaction or disclosure before you consider the internal control? Now the second risk that you need to calculate here is control risk. So talking about control risk, it says controls are expected to be 75% effective. So can I say 25% chances are that they will not be able to prevent, detect or correct the misstatement? Yes, sir. So control risk is 25%. So second point is control risk, risk that a material misstatement individually or in aggregate. Where is the material misstatement? In the assertion related to account balance, class of transaction or disclosure. It will not be prevented, detected or corrected by the internal control. So chances that the material misstatement will not be prevented, detected or corrected, that is the control risk. Now talking about the risk of material misstatement. From the 40% inherent risk, can I say 75% will be prevented, detected or corrected? Yes, sir. But 25% will not be prevented, detected or corrected. So the overall risk of material misstatement is 10%. Out of 40%, 25% risk is still there. So 10% is your risk of material misstatement. That is the risk financial statements are materially misstated prior to audit. Got it, sir. Now to deal with this risk of material misstatement, auditor comes. He performs his audit procedures. Then we calculate the detection risk. So auditor expects that he will detect 80% of the material misstatement. So how much he will not be able to detect? 20%. That is your detection risk. So detection risk is 20% risk that audit procedures will not be able to detect a material misstatement. Got it? Got it, sir. Lastly, we calculate the audit risk. Sir, what is the audit risk? Out of the risk of material misstatement, how much will not be detected? So out of 10%, 20% will not be detected. So the audit risk is 2%. And now when the material misstatement is not detected, he will give a wrong opinion. So wrong opinion when financial statements are materially misstated. So when the financial statements are materially misstated and he is not able to detect, that time he gives a wrong opinion, and that is called audit risk. You understood the concept or not? Yes, sir. These things you just need to understand as a good student. That's it. Now, sir, can I make the audit risk as zero? No. Can I give a guarantee that financial statements are free from material misstatement? No. What is the reason? Inherent limitation of auditing. Inherent limitation of auditing. So with this, we come to the interval of this session. Okay, this is the interval time. You can take a 5 minutes break. And after that 5 minutes break, what we are going to do, we are going to study the inherent limitations. Ready? Ready, sir. Welcome back after the break. Now, sir, let's talk about the concept of audit risk. See, understand, huh? If there is an auditor, okay, sir, when he's doing the audit, okay, sir, let's say while doing the audit, he feels there is no material misstatement. When there is no material misstatement, he will give an unmodified opinion. Okay, sir. Now, later on, he finds that there is a material misstatement. Oh my God. Now, sir, if in the same financial statement he find a material misstatement and for this he has given an unmodified opinion, can I say this is a wrong opinion? Yes, sir. So this risk of giving a wrong opinion is called the audit risk. What he should have done? He should have given a modified opinion. Basic clear? Clear, sir. Now, sir, these are the inherent limitations of auditing. Sir, do we need to learn it in detail? Answer is no. Just for the next 2-3 minutes, understand the points. If you have a good understanding, that is enough for CA final level. Learning part is more important on CA inter level. Okay, sir. Now, sir, what do you mean by inherent limitations of auditing? That means the limitations that auditor will not be able to detect a material misstatement. First limitation is related to the management, that is nature of financial reporting. Okay. So first limitation is related to them. Second limitation will be related to us as an auditor. Okay. So first limitation is nature of financial reporting. So in nature of financial reporting, they say that when you prepare the financial statement, not everything is accurate. Not everything is perfectly correct. Many things are based on the judgment by the management. Judgments are involved in accounting estimates, in accounting policy. So for example, management makes an estimate that we will win the legal case, and because they feel they will win the legal case, they don't create any provision, they don't disclose any contingent liability, and later on if they lose the case, because you did not create a provision, there is a material misstatement in financial statements. So sometimes the accounting estimates can go wrong, accounting policies can go wrong, and because of that, because they are based on the judgment of management, these are the material misstatements which can't be avoided. Now talking about the nature of audit procedure. In simple terms, auditor cannot test all the transactions. And whatever he's testing, maybe that the management does not provide complete information. Maybe they are doing some fraud. And if they are doing a fraud, that is very difficult to detect. Sir, why the fraud is difficult to detect? Because we as an auditor don't have the legal powers. We don't have the legal powers to search the premises, to seize the documents. We don't have those legal powers, and because of the lack of legal powers, we cannot detect a fraud. We can't detect a fraud. So nature of audit procedure says that auditor cannot test all the transaction. He does sampling, and whatever he's testing, management may not provide complete information. Why, sir? Because they may be involved in fraud, which can involve sophisticated, carefully organized schemes which are designed to hide the fraud. So, sir, how can we not detect a fraud? Because audit is not investigation, we don't have legal powers. So this is about the nature of audit procedures, which basically says that auditor cannot detect the fraud. Now, sir, talking about timeliness of reporting and balance between benefit and cost, you need not go in detail, just understand a basic thing, that with time the things change. With time things change, because if you were doing audit last year and you are doing audit this year also, last year you tested some controls and the controls were effective. Last year you tested some controls and the controls were effective, and this year, maybe due to some cost cutting, you have less manpower, you have less resources, and this year you decided that I want to skip the test of control. Last year I tested the controls, this year due to lack of manpower, to save some cost, I want to skip the test of control. Now, sir, if the controls are not effective this year, if the processes have changed this year, it can affect your audit opinion. And this is another limitation. So timeliness of reporting means that with time, the things can change and the value of the information comes down. Balance between benefit and cost means that to save the cost, you may reduce your audit procedures, and because of the reduction in audit procedures, you may give a wrong opinion. So these are the basic things that you just need to understand. And the last point is related to some other matters. This, I think, from concept point of view is little important. Sir, what are the other matters in which case it is very tough to detect a material misstatement? First matter, I think all of you know, that is fraud. Sir, which type of fraud? Junior people or senior management? Senior management. See, if an employee does a fraud, na, senior will catch it. But if a senior is doing a fraud, who will catch it? So fraud involving the senior management or collusion. Sir, what do you mean by collusion? What do you mean by collusion? So collusion is a concept in which two or more people come together. Two or more people come together and do a fraud. For example, let's say there is a purchase officer in an entity. Okay, sir. And there is a supplier of an entity. So the purchase officer and supplier, both of them collude. The purchase officer buys the goods at a higher price, and whatever higher price he's paying to the supplier, he's sharing that money with the supplier. So for example, goods value is 100 rupees. Instead of 100 rupees, I am paying to the supplier 150 rupees. Instead of 100 rupees, I am paying 150 rupees. So extra 50 rupees that the purchase officer is paying to the supplier, they both can share. They both can share 50-50, and this is what collusion is all about. So fraud, when generally involves senior management or which involves two or more people, then it is difficult to detect. Second thing which is difficult to detect is related party. How do you get to know a party is a related party? Management can hide it. And if the related party disclosure is not there in the financial statements, so we know ind AS 24, AS 18, that related party disclosure should be there. So if management omits a related party transaction or relationship from disclosure, it can lead to a material misstatement, and that is difficult to detect. Similarly, if there is a non-compliance with law regulation, it will lead to a penalty which requires any provision or contingent liability in the financial statement. And if the management does not disclose this non-compliance, they don't create this provision, again it can lead to a material misstatement which is difficult to detect. And the last point is, there can be which is similar to this point, there can be future events and conditions which can affect going concern. So when the financial statement are prepared as per going concern and some future event happens which affects the going concern, again it leads to a material misstatement. So these are the four areas where it is very tough to detect the material misstatement: fraud, related party, non-compliance with laws, regulations, and lastly, going concern. If you want to remember these 4 points, I will request you please remember these 4 points, because when we will revise essay 240, when we will revise essay 550, 250 and 570, again this concept will be interlinked to that. So very basic, easy way to remember these 4 points is, generally entity does the fraud with related party. When entity is doing the fraud with related party, is it a compliance with law or a non-compliance with law? Sir, it is a non-compliance with law. And with every non-compliance, what will come? Penalty. And such a heavy penalty that entity will be affected, the going concern. Entity's going concern will be affected. So these 4 points you can remember in a flow once more. Fraud with the related party, it is a non-compliance with law, that will lead to a penalty that will affect the going concern. So the four areas are fraud, related party, no-clar means non-compliance with laws and regulations, and the last point is future events and conditions affecting the going concern. Deal done. Take 2 sips of water. Oh my god, my water is finished. I'll just get back. Yes, everyone. Are you able to recall na? See, enter little you are able to recall, because Baba, I understand CA inter. See, so many things we study there, right? But it's important to know these concepts so that your relationship with auditing, okay, that becomes very smooth. That should be very smooth. Now, Baba, tell me one thing, okay? Which concept did we study right now? Sir, we studied inherent limitations of auditing. Inherent limitations means that these are the reasons because of which it will be very difficult to detect a material misstatement, and that's why the audit risk is not zero. Okay, audit risk is not zero. But the question comes, when inherent limitations are there, okay, so can the auditor say that because of the inherent limitations, he could not give a right opinion? Can the auditor say that because inherent limitations are there now, I could not detect a material misstatement? Can he use it as an excuse? Can the auditor use it as an excuse that he was not able to detect a material misstatement? Answer is no. As an auditor, even though inherent limitations are there, still you need to do your audit as per essays. Sir, what do you mean by do audit as per essays? That means three things should be done as per essay. First of all, your audit procedure as per essay. After you do the audit procedure, you collect the evidence, that should be as per essay. And after evidence, whatever report you issue, report that is given in essay 700 series, that report should also be as per essay. So procedure, evidence, report. Come on. Procedure, evidence and report, these three things should be as per essay. And this is the concept we have written here. See, because of inherent limitation, there is a risk that misstatement cannot be detected even though audit is done as per essay. Now, sir, what do you mean by audit is done as per essay? Audit is done as per essay means audit procedures are done, evidence is collected, and audit report is given. These three things are done as per essay. So you should do your audit as per essay, and then everything is done. Now, sir, if I do my audit as per essay and later on a material misstatement is discovered, okay, Does it mean that I did not do my audit as per essay? No. That does not indicate a failure to do audit as per essay. Then no one can take action. ठीक है. Even NFRA, you know NFRA is an authority which can take action against the auditor if they don't do the audit properly. Yes, sir. So let's say auditor gave the report and later on material misstatement is found. Can they catch the auditor? No. If the auditor has done the audit as per essay, that means procedure, evidence and report. If these three things are as per essay and they are properly documented now, then Baba, auditor is supported. No one can question him. Acha, does it mean that we can settle with less than persuasive evidence? No. You still need to collect persuasive evidence. You still need to collect sufficient and appropriate evidence. So just to summarize it, no need to learn it properly. Just understand it. Just understand the fact that as an auditor, inherent limitations are there. But at the same time, you should make sure that you are doing the audit as per essays. That means the audit procedure, audit evidence and report. These three things should be as per essay. Okay, you should have proper persuasive evidence, sufficient and appropriate evidence. Got it, sir. Now, Baba, I think we are mostly done with it. We are just properly done with all the concepts. If I come to your book, okay, audit risk concept is done. Come on, done, sir. Inherent risk, control risk, risk of material misstatement, done. Detection risk, done. Inherent limitations, done, done. बहुत बढ़िया. Now, Baba, I think we are just left with two more concepts: professional skepticism, and apart from professional skepticism, the procedures. With this session will be completed. Are you people there with me? Yes, sir, we are there with you. Talking about the professional skepticism, don't need to go in too much detail. You just need to understand that, sir, if you want to deal with inherent limitations, you should be alert. You should be alert. You should have a questioning mind, and these are the things you should have. So there should be an attitude where you have a questioning mind. Whenever you find some hanky panky, whenever you find some suspicious transaction, you should question the management about it. You should be alert to the condition that indicate a possible misstatement. That means if you find a related party transaction, okay, if you find a related party transaction, then check whether it is properly disclosed in the financial statements. Okay. If it is not disclosed, it will be a misstatement. And lastly, whatever evidence is given to you, properly assess that evidence. Properly assess that evidence. For example, they provide you with an agreement. ठीक है? They provide you with the agreement, then check whether the terms and conditions of the agreement, they are normal or this transaction is again suspicious. So these three things involve professional skepticism. That means you should be alert, you should have a questioning mind, and there should be critical assessment of evidence. Basics you just need to understand. Now, as I told you, audit should be done as per essays. Okay, whatever essays are relevant to your audit, follow them. Follow each requirement of your essay unless essay is not relevant. For example, if I talk about essay 610, which talks about the use of work of internal auditor. So if there is no internal auditor, this essay is not relevant, don't use it. Similarly, there is a conditional requirement and that condition does not exist. For example, in essay 501, there is a condition that if the inventory is material, then only you need to do the physical count. But if the inventory is not material, then you don't need to do the physical count. So you should comply with all the essays which are applicable and relevant to you. Got it, sir. Now moving to the last topic, that is the audit procedures. Everyone, please focus on the board. Okay, take 2 sips of water. Got it, sir. 5 more minutes I need your attention, then this topic will be done. Focus here. So let's say I am SK, okay, I stay in Noida. Now, sir, when I stay in Noida, I need an iPad. So I place an internal order with the BB Virtuals head office, which is in Mumbai, that I need iPad to teach my beautiful students. Okay, sir. Now what will BB Virtuals do? They will take quotations. They will take quotations from 3 vendors: vendor 1, vendor 2, vendor 3. Why? Sir, there is a risk that they can purchase at high price. To deal with the risk, they have a control that we should take minimum 3 quotation. Whoever gives the lowest price, they will take it. So let's say they chose vendor 3. Now, sir, when I am placing the order, I will place a purchase order which will be authorized by, yes, people. Good morning, good afternoon, good evening, our favorite BB sir. Sir, why is the authorized purchase order there? Because there is a risk that unauthorized purchase can take place in the organization. Now, when BB sir placed the purchase order, the goods will be delivered at my home. Now, sir, there is a risk that proper quantity is not delivered or proper quality is not delivered. So, what control we can exercise? There can be proper quantity and quality check. This is what happens in the procurement process. Okay, procurement process or purchase process of generally listed entities and big entities. BB Virtual is also big entity, right? Full promotion. Okay. So now what is this process called? Sir, this is called risk assessment procedure. So risk assessment procedure? Yes. Did I give you understanding of the entity? Yes. Did that understanding help you identify and assess the risk and controls? Yes, sir. So when you are taking understanding of the entity, environment, internal controls to identify and assess the risk of material misstatement, that is inherent risk and control risk. You understood the risk, you understood the control. Risk, control. Again, risk, control. So this is what risk assessment procedure is all about. The management explains to the auditor how the things work through which he assesses the risk of material misstatement. Got it, sir. Now, sir, when I am explaining you, you may be estimating what can be the inherent risk, what can be the control risk, like we did in the case study. In the case study, we studied that inherent risk is 40%, control risk is 25%. Is it actual? The answer is no, it is an estimate. You are estimating that control risk is 25% and they would be 75% effective. Now, sir, how to know that controls are effective? How much? Actually, what is the status? For that, you need to do the testing. So in risk assessment procedure, focus is on understanding, not on testing. We do the proper testing under further audit procedure. So in the further audit procedure after risk assessment procedure, we focus on testing. First, we test the process, that is the process of purchase, that is the test of control, in which you can check our quotations, purchase order, quantity and quality check documents. When you check this process or controls, it is called test of control. After you check the process, you check the amount. Let's say the purchase amount is 3 lakh. Now, sir, how can I check the amount? Checking the amount is done by substantive audit procedure. Okay. In substantive, there are two parts: test of details, that is checking the documents, and what you can do is analytical procedure. So to check the amount, which documents can I see? You can see the invoice, agreement, purchase order. All of them will have the amount. What other thing I can do to check the amount? Analytical procedure. So generally we do year on year analysis of purchases, through which you can get to know about that. So what are the two procedures Shubham sir taught? RAP and FAP. RAP is risk assessment procedure, understand the things, assess the risk of material misstatement. FAP is further audit procedure where you test the controls and test the amounts. Amounts is substantive procedure which includes test of details, or you can say documents, and then you have analytical procedure. Deal done. Are Baba, yes or no? Yes, sir. Apart from this, there are other types of procedures. So you can say this is the first category of procedure. And these are the other way of saying that these are the procedure. For example, please read observation. Observation means you are looking at something, okay, and getting the evidence. So looking at the process being performed by others. For example, during your articleship, in audit, you must have gone for some inventory count. So if you are observing the inventory count done by the entity people, that is observation. Inspection includes generally two things. Sir, first thing is inspecting the records or documents. That means you are checking the invoice, agreement, okay? Or you are doing physical examination of asset. Physical examination means PP or inventory. Sir, inventory was here also. Arey Baba, here you were not physically examining. You were observing the inventory count done by other. Here you are doing the physical examination of the inventory. So this is inspection. Okay, sir. Then we have external confirmation. This thing we are going to cover in detail in SA 505. No need to worry. Recalculation. This is generally done to check the mathematical accuracy. Generally, it is used for depreciation, interest calculation. You recalculate these workings of the management. Then reperformance. Again, you do the same thing that is done by the management, but this word is used for internal control. So generally, when we prepare bank reconciliation statement to check that the BRS prepared by the entity is fine or not. This is a re-performance. Then analytical procedure, again we are going to cover it in detail in SA 520 ka video, don't worry. And lastly we have inquiry. Inquiry you can just read through. The main focus of inquiry is just that, as you understand, you are asking the management, getting the information. You are asking the management, getting the information. That is what inquiry is all about. So if you read with me, it is a very easy point. You are seeking the information from knowledgeable people. This information that you are seeking, it can be financial, non-financial. These persons that you are asking the information, they can be within the entity or outside the entity. Got it, sir? This inquiry that you are doing, it can be a written inquiry or it can be a oral inquiry. If you are doing a oral inquiry, see the last point. You should take written representation from the management TCWG for your responses to oral inquiry. Got it, sir? Now, sir, inquiry is used a lot in audit. Okay? Whatever response you are getting, evaluate the response. Now, sir, when you are evaluating the response, you can get three types of information: something new, something which supports the information you already have, or something which is contradicting. Okay, sir. Once again, you can get a new information, supporting information, or contradicting. If you get a contradicting information, you need to do additional procedure to see whether any misstatement exists, whether there is any misstatement. So this is what is written here. Responses to inquiry can provide information not previously possessed, that is a new information. They can provide a corroborative evidence, something which is supporting, or they can provide something which is significantly different, that is a contradicting information, like management override of control. What is management override of control? That is any type of fraud. Now, sir, the last part of inquiry says, sometimes we people also do the inquiry about management's intent. Sir, what is this point? Understand. Let's say management has created a provision for the employee bonus at 15%. Now, if I want to test this provision, I will inquire about three things. Sir, what are these three things? Para. Para means past history, whether in the past management has given such type of bonus. Reasons why they want to give so much bonus. Have the employees done really great? And A for ability. Does the entity have so much money to give such bonus? Okay, this same concept we will be applying when we will be studying the chapter of SRE. Okay, when I'll be teaching you SRE. SRE means standards on review engagement. When I'll be teaching standard on review engagement, same concept will get repeat and I will again revise it for you. Don't need to worry. So the basic concept says, whenever you want to inquire about management's intent, whether management actually will distribute 15% bonus, you inquire about para. Para means past history, reasons, and ability. So this is all about it. So with this, I can say our revision of the basics of audit in this part is done. Okay, I hope you enjoyed this revision. Before I wrap up this revision, I just want to quickly summarize the topics that we covered in this revision. We covered the topic of overall objective. Overall objective is we want reasonable assurance so that we can frame our opinion and report and communicate our opinion. Second thing that we studied were the types of risk: inherent risk, control risk. Combine them, you get the risk of material misstatement. Now from the risk of material misstatement, some things may cannot be detected, that is the detection risk, and when you combine, you get the audit risk. Can the audit risk be zero? No. Why? Due to inherent limitations of auditing. Got it, sir? How to deal with inherent limitations? Be alert. Have a questioning mind. That is professional skepticism. And at last, we cover different types of procedure. First type of procedure, you can say RAP or FAP, risk assessment procedure, further audit procedure. In the risk assessment procedure, what we do? Take the understanding to assess the risk of material misstatement. Do we do the testing? No. We test the things in further audit procedure, which involve test of process, that is the test of control, test of amounts, that is the substantive procedure, which includes test of details and analytical procedure. And lastly, what did we cover? Sir, we covered these types of procedure. What do I call this second set of procedure? Do you know vowels? Yes, sir. A, E, I, O, U. Okay? This is a technique I learned from my teacher, Neeraj Arora, sir. That is what this technique I am sharing with you. A for analytical procedure, E for external confirmation, inquiry, inspection, observation, U for recalculation, and then re-performance. Okay? And these are the procedures that is all about. Before I wrap this session, I am leaving a question for you. Please share your answer in the comments. Sir, If I am saying that there is a misstatement, okay, will this misstatement be in a account balance, class of transaction or disclosure, or this misstatement will be in a assertion related to any account balance, class of transaction or disclosure? So misstatements are in the debtor or misstatements are in the valuation of debtor. This is what you need to answer. Option A, in the account balance, class of transaction or disclosure, or option B, in the assertion related to account balance, class of transaction or disclosure. You need to give me your answer in the chat box. Oh, sorry, in the comment section. Okay, thank you so much everyone for watching this video. If you liked it, do give it a like. Okay, please share your feedback in the comments because your appreciation is my motivation. And if you have not yet subscribed this channel, do subscribe it for more such amazing conceptual revision videos. Thank you so much. Have a good day. Keep studying with happiness because then only we progress. See you all in the next revision.